right. All right. Well, we'll let everyone kind of file in here and give it a couple seconds here, and we'll go ahead and get started. It's very excited to go through the webinar for today, talking through some of the financial reporting and workflows that ProNovos can offer. So, yeah, well, like I said, we'll give everyone a couple seconds here, and we'll jump to it.
Denver, do you want to give me control back?
Oh, yeah, there you go. All right, yeah, we are live. So, all right. Well, everyone, thanks for jumping in today for today's webinar. We're going to be showcasing some of the financial workflows, some of the reporting capabilities, and go through what's going to save everyone some time and effort when it comes into the monthly reports, right? So a little bit about just a little intro. My name is Denver Sperry. I head up the implementation team here over at ProNovos for the past couple months, and I've got about 10 years of experience with implementing software to construction companies when it comes down to analytics. And I implemented foundation software for about 9 years, so got plenty of experience with the construction analytics space. And we're very excited to also have Mast on the webinar with us today, and he's going to go through some introductory stuff, kind of explaining the WIP process, and talk through maybe some struggles that we see that clients have. So Chris, if you want to go ahead and give yourself a little bit of an intro, we can jump right to it.
Awesome. Well, thank you, Denver. As Denver mentioned, my name is Mast. I'm the director in GBQ's construction and real estate practice. Welcome, everyone. Thank you for joining us today. GBQ is headquartered in Columbus, Ohio. We've got offices in Toledo, Cincinnati, and Indianapolis, and actually now Manila, Philippines as well. A couple people there. So we also just celebrated our 70th anniversary, so we've been around a while here. We do have a team that's dedicated to the construction industry that serves over 75 contractors and developers. So I promise I do know a little bit about construction, but we are a full service accounting firm that not only does audit and tax work, but we also do IT, consulting, forensic and dispute advisory services, business valuation, things like that. So pretty much anything that you could need under the sun from an accounting and consulting perspective. Personally, I spend a lot of my time working with contractors, helping them reconcile their WIP schedules and making sure that they have accurate information, such as updated estimated costs complete, so that they can present an accurate financial statement to their banks and bonding companies. And so that those users of the financial statements can actually rely on what they're being provided. I'm very, very excited about ProNovos because I believe it's going to save our clients a lot of time and money, both in the field and kind of in the home office and the accounting office. So that's why GBQ and myself have been so involved with ProNovos, is because we really believe that it can make a big difference. I know that we have varying levels of experience on this webinar. I did want to start out just kind of going through some of the basics of recognizing revenue in the construction industry, because until you understand that, you may or may not understand why accurate information or using ProNovos even matters to begin with. So without further ado, I did want to run through a quick example with you guys. So first thing that you'll see on the screen here is just a very basic income statement that starts out with construction revenues earned. Then you've got your cost of revenues earned, so your time and materials that go in there, gives you your gross profit. And then you would back out any selling, general, and administrative expenses like marketing costs to get to your net income. And what I really want to hone in on here for construction is that, if I was outside of construction, I was selling you a pair of jeans. As soon as I buy those jeans, you're going to recognize revenue. That's what's called point-in-time revenue recognition. Well, in construction, a lot of times we're working with contracts that last months, if not, over a year. And so we need to find a way to recognize revenue, what's called over time. And when we do that in construction, I think the big confusion is that people still think that you're going to recognize revenue based on what you've billed. And if you take nothing else from this little segment here, it's that billings do not equal revenue in construction accounting, okay? What you really need to look at, and we'll go through some examples to make it easier to understand, I like to break it down like this for my clients, and some even have their internal financial statement set up like this, but I would never present a financial statement to a bank that looks like this. Within your revenues earned, you actually have what you've billed so far to date, as well as a percentage of completion adjustment to bring it back to what you've actually earned under, again, what's called percentage of completion accounting that we're going to walk through here in a second. So again, just because you've billed something, you might be able to bill at the beginning of a job, even though you've done no work, doesn't mean that you've earned revenue. Or maybe you haven't been able to send a bill, but you've done work. That doesn't mean you haven't earned revenue as well. This is just an example of a WIP schedule. I'm guessing everyone on this call probably has a different version of this WIP schedule, and some can, be 20, 30 columns long. So a lot can become confusing, especially if you're a project manager or someone that doesn't look at it every day. There can be a lot going on, but really this just looks at what's your total contract, what's your total estimate to complete that contract, how much cost have you actually incurred so far to date, and what have you billed to date. And this allows you to reconcile back to your income statement. Okay, so how do you actually calculate that percentage of completion? If we're not going to base revenues on billings, how are we going to determine it? Again, 90% of the time, contractors are going to use something called the cost to cost method. And so you take your cost incurred so far to date. So a lot of times I use the example of a rocking chair just to be easy. So let's say I put $5 of time and materials into building our rocking chair. I take that and I divide it by my total estimated project cost, which in this case, let's just say, I think it's going to take me, go back there. So in this case, let's say I think it's going to take me $10 to build that rocking chair. So $5 of cost incurred divided by $10 total estimated cost. I am 50% complete on that rocking chair. I take 50% complete times my contract amount. Let's say I think I can sell my rocking chair for $20. So I take $20 times 50% complete, and I've actually earned revenues of $10. Okay. I compare that $10 of earned revenue to what I've billed so far. Let's say in this case, I've billed nothing. I have an underbilling of $10 because I've earned 10, I've billed nothing. So if you're like me, you learn a lot better seeing actual examples rather than just a bunch of nerdy accounting formulas on a screen. So let's walk through a couple just real quick. Okay, so this first one, you've got $1 million contract. You've got estimated costs of $930,000. You've incurred costs to date so far of $465,000, but you've been able to bill nothing so far. For whatever reason, you haven't been able to send a bill. Yeah, so what your income statement is going to look like before you do a percentage completion adjustment is it's going to look like you have no revenue because, again, in our example, we've billed nothing. So nothing has run through the accounting system. So it looks like we've earned nothing. We haven't done our percentage completion adjustment yet, but we've got $465,000 of actual cost hitting. So if you sent this to the bank or you sent this to your owner, it's going to look like you're about to go bankrupt and you're not doing very well. So this is why it's important that we're not keeping financial statements based on billings, and we do this calculation ideally on a monthly basis. Because I've got some clients or prospects that don't do it until the end of the year, and then you've got monthly financial statements that look like a roller coaster. So we walk through our calculation. We've got $465,000 of costs divided by our $930,000 estimate. We're 50% complete on this job. We take that 50% complete times our contract amount of $1 million. We've actually earned revenue of $500,000. We compare that to our billings. Again, we weren't able to bill anything. And in this case, we have a $500,000 underbilling, which makes sense. We've underbilled. So that actually runs through the financial statements is I now need to post an adjustment to bring my revenue up. So now my income statement looks a lot more normal. And the whole idea here is we're matching our expenses with our revenues so that they're kind of hitting at the same time and making our income statement look a lot more reasonable. Okay, the opposite scenario would be if we have that same $1 million contract, that same $930,000 of estimated costs, but now we've done no work and we're able to send a bill for $500,000. So what your income statement is going to look like before you do this adjustment is you're going to have $500,000 of billings because, again, we're able to send a bill, but we've got no offsetting costs right now. So now it looks like we made $475,000. You send that to your owner and they think they can go out and buy a boat a lot of times in construction, right? So you need to be really careful when you're recognizing revenue and presenting financial statements in construction because the revenue, the percentage of completion can play a big role in how your health of your financial statements looks. I do want to let you see, okay, so we run through the example. In this case, you've got 0 costs incurred, so we're 0% complete. You multiply that by your $1 million contract, you've earned no revenue. In this case, you were able to bill ahead. So you got $500,000 over billed. You've been billed more than you earned. So we run that through our financial statement, and now we look a lot more reasonable because we're able to back out those revenue, those billings. So revenues and costs are matching. Last example I just want to give real quick because I really want to show the power of this estimated cost number. Contract amount stays the same at $1 million. Our estimated cost, which is our denominator, decreases from $930,000 to $800,000. Again, that's just an estimate. So that's a project manager saying, hey, I think I can do this in less time or with less materials. My cost to date stay the same at $465,000 and my billing stay the same at $500,000. So again, before any kind of adjustment, I've been able to bill $500,000. So that's flowing through my revenue. I've got costs of $465,000. So I'm showing gross profit of $35,000. I run through my calculation, $465,000 of actual costs divided by my estimate of $800,000. Now, instead of being 50% complete, just because I changed my denominator, I'm now 58% complete. By changing that percentage of completion, I'm now going to recognize more revenue sooner. Okay, so this $800,000 may or may not be accurate, but you can see that just by decreasing my estimate $130,000, I became 8.125% further along in my job. So I take what I've earned and I compare it to my billing, and I'm $81,000 under billed. So again, in this scenario, I need to actually increase my revenue $81,250 to bring it back to percentage of completion construction accounting. So now I'm actually recognizing $91,000 instead of $10,000 in our last example. Again, all because I changed that estimated cost to complete. Now, my typical client spends a lot of time on their WIP, and probably at least 90% of that time it's completed in Excel, which is prone to formula errors, requires a separate tie-out to make sure it accrues back to the accounting system. And as part of preparing the financial statements, one thing that we need to be able to do from an auditor's perspective is be able to tie out current year revenue and costs between the WIP and the financial statements that I was just showing you guys. And again, that's normally done 90% of the time, probably in Excel. And it can be a very tedious process, not just for the client, but also when I come in, because a lot of the times the WIP schedule that I'm seeing is everything is job to date. So you've got contract amount to date, you've got estimated cost to date, you've got actual cost to date, you got billings to date. But in order to tie back to an income statement, which is just a snapshot of 1 year, I need to be able to break out current year versus prior year if that job ran over year end. And so Denver, why don't you go ahead and pull up ProNovos to be able to show the WIP schedule within ProNovos, because I really think it's the future of the WIP schedule here.
Yeah, and like you said, when you're trying to tie out to Excel sheets, you never know where that data is really coming from. If it's a data dump and there's a bunch of edits being done, I think the thing that we see a lot is there's a lot of human error that can happen when looking at WIP reports that aren't directly being generated out of the accounting system, right? So the beauty of ProNovos here is this will make a connection to your guys's ERP. It'll extract the data. It'll present it in meaningful ways. So there's no, chance for human error when looking at it, because it is the representation of the data. So when we're taking a look at the WIP here, we're going to see right from the accounting system all of the jobs that we have for this company, right? We can see that our total contract amount, how much earned revenue we have. So what Chris is talking about based on percentage of completion versus what we've billed today. So you get a kind of a global snapshot. And then whether you guys are over or under billed, what that number looks like in total for all your jobs. Now, if you look down below, we're going to see a list of each and every active job. So by default, all your active jobs, as long as you're managing those in your accounting system, when they're marked as inactive or closed or anything like that, this will always be your up-to-date job list out of the system, right? So when you're looking at, taking a look at one of these jobs here, we'll just focus on our first job here, this Chrysler building. We can see that we've got our contract amount of 5.1 million. We've got a revised budget of 4.2 million. We've got this third column here, this projected final cost. So this is a tool that we've developed to, integrate with the WIP so that the project managers or, office personnel, whomever is going to be managing the WIP, has the opportunity to forecast their jobs. And there's two ways that you can do that. You can either do that at a global, just at the job level. I want to just plug in a number here, right? So for example, if I wanted to click on this $3.1 million, maybe that's just wrong. We miskeyed something. Maybe it should have been 4.1 instead of 3.1, right? So I can click on this number here. It'll open up a flyout window with, all the information here, all the time we've done any edits to this projected final cost number for this job. But let's just say, yeah, we fat fingered it. We want to type in $4.1 million and we're going to change it as of today. Now you do have the option to pick a day, right? So if I was running this for March and I wanted to go back and make that adjustment into March, I could go back, update it there and update the WIP. But let's just do it as of today, just to not get confused here. So $4.1 million as of today, we can go ahead and update the WIP. All right, before I click that, just before I leave the screen, as you see down here, we've got all of our prior adjustments. If I really wanted to click and see all the times we've edited this job, you'll see a running total of everything. And then down below, we feel that this root cause breakdown is a very powerful tool for contractors. And not only are we able to make these adjustments, hey, it's 4.1 or hey, it's 3.7, whatever. When we get into the actual projected final cost tool, we'll get into where these are being assigned and how these are going to impact, maybe your decision when looking at these jobs moving forward. So this will give us an aggregate total of all the reasons why we're doing well, right, on a job, or why the job may be performing not up to standards, right? So whether it's a scope gap, whether it's bad production rates, whatever it may be, you guys can start tagging these reasons for your jobs. And once again, with anything like this, we tried to tell everyone it's not so much a tattletale kind of thing. It's more of insight, right? So you guys can make those proactive decisions when you have similar jobs in the future. Hey, every time we do a government job or a school job, whatever it is, we tend to, our production rates are a little bit slower than what we would like to see it. So maybe on those estimates going forward, we account for that ahead of time. So it's just something that I think we don't see many, if any, other programs out there that are able to track this kind of detail to it. So let's get into it. So we'll save our cost here and we'll update the WIP. Okay, so as we'll see, that'll update our WIP. We had $3.1 million in there. It's now at $4.1 million. But it just like what Chris was mentioning in his slides, when we're looking at that projected profit margin or we're looking at the percent complete, these numbers are getting edited because we are updating that projected final cost. So the way that this WIP will look at it is it'll take that cost to date, compare it against the projected final cost number to give us that percent complete, right? Which will then in turn edit our earned revenue. And then finally, it'll affect those over and under billing values as well.
Yep. So in this example that he just gave, he actually increased the projected final costs. So he's increasing the denominator, which makes your percentage completion go down, which means that you're going to recognize less earned revenue and your overbillings are going to go up. So if you look at the top part of the screen that he showed originally, that over under billings number went up.
Yep. So this does, affect it right away. So like, as you guys are making these edits, you'll see the results of these kicking in immediately. So when we're looking at something like this, if we want to get into more of a detailed look at the projected final cost, right? Maybe it's impactful to change this for bottom line numbers, but the tool that we really like showcasing is the projected final cost, which is what we would see, project managers or office managers, someone is coming in here to do the forecasting for the job. So, Chris, in your experiences too, WIPs being done in Excel, I'm sure we're seeing the same thing, on the forecasting side of it, a lot of people don't want, their PMs or just a lot of people in the accounting system. So I think having a tool like this is pretty awesome too.
Well, I think a lot of times you have project managers who are notorious for having estimates that are either really conservative or really aggressive. And you don't necessarily want to mess with your project manager's estimate within the, whatever program you're using. But that's why a lot of people use Excel, so that they can update that estimate outside of what the project manager sees potentially, to really adjust that estimate so that you're recognizing a more reasonable amount of revenue, because we just saw how much it impacts the financial statement. So having the ability to come in here and make some of those adjustments, I think, is really valuable.
Yeah, and that's a good point too, is like, as you're going through this, so let's just say we get down to rough plumbing and we want to edit the labor. We'll say that if we click into it, we're going to see a flyout window of the production rates, the cost, the hours, all the things that you guys are able to manipulate, when it comes to forecasting. So if you wanted to just simply change the percent complete, if you wanted to change the projected final hours, if you want to change the projected final cost, whichever way makes the most sense for each contractor, given, maybe we're tracking quantities, feet of pipe we're installing, or, cubic yards of concrete we're pouring, whatever it may be. That can also be tracked in here as well. So when we're looking at costs, we'll just make a simple adjustment here. If we go into the cost, we've got a projected final cost of $2,500, and we've got $384. But let's just say in this scenario, we want to showcase that we're going to save some money here, right? So we're going to take this number, we're going to save, $2,200 is our new projected final cost. Okay, so for the labor, what this does, and this is where those reasons and for the adjustment come in, you'll be able to click, hey, why are we saving money? It's great we're saving money, but what's the reason for it? That way you guys can look back on all of your adjustments later on and see, where we did well in the job. So we can just say for this one, we had fast production rates, type in any sort of comments that you guys want. And this is what's going to give you that historical data when you're looking at all of your jobs, or for this job in particular, on why you guys are saving money, right? So if I go ahead and confirm that, that'll give us a new prior adjustment, right? We'll be able to go down the list, look at it, all the reasons why we saved money. And, it's just, I think this is the coolest thing, because if you take it one step further, right, we go through, we make all of our adjustments to each one of our cost codes, cost classes. Once you're done with the forecasting portion of it, you'll be able to scroll up to the top here, and we'll see we've got 2.7 for projected final cost here. So the little exclamation point to the right of it, and Chris kind of called this out before, is where this is an indicator that the projected final cost on this screen here is not matching the projected final cost that's on the WIP report. So why is that important? Because if we're having conflicting data, or even just hey, we've updated it, and now we want to push this value to the WIP report, this is your you can click right into it. It'll say, hey, your WIP report, we typed in our $4.1 million earlier, doesn't match to what we have in total here. So let's just say that this number here is our projected final cost. So we can go in there, we can type in that value. We can say, yep, as of today. Now you can type in any number you wanted to, right? We could have typed 2.8, 3.1, 4.0 in those scenarios where the project managers are, or whomever, we're sandbagging a little bit. Maybe we want to type in a slightly inflated or deflated value in here. This will push it to the WIP, and it'll make those adjustments just like we saw before on the percent complete for that job. So if we go ahead and push this value to the WIP, right? Now, if I refresh the page just to show that that value is now going to be matching the WIP, we'll go, see, exclamation point's gone. We'll go back to the WIP. We'll refresh this one, and we'll see that that value, that 4.1, it might be a date. this will update to our projected final cost. It'll update our percent complete and then, affect our over and under calculation, right? So I think this is the one tool that is able to kind of be your 1 + 1 = 3. If you had to go with some cliche saying here, is that you have the tool that connects directly to the accounting system. You're able to pull all of your jobs, the WIP schedules, the forecasting tools, have it be that one-stop shop, because we all know that in any job, right, the make or break is always the labor on the job. And I think what some people kind of underestimate is, how much time we're spending in the office just doing, I don't want to say trivial stuff, but, preparing job reports and doing monthly projections and things of that nature. And, if we're combining a whole bunch of spreadsheets together to accomplish that, maybe, you look at it differently and have this one-stop place where everyone can do all of their adjustments and look at the insight all in one spot, right? Chris, how
Denver,
much time do you think this
sorry, go
would save? Oh, sorry.
I was going to say, finish your comment, and then I want to make 2 comments about the WIP schedule.
Okay. I was going to ask you how much extra time do you think that you've seen people spending, spinning their wheels in Excel?
I mean, so what I typically see is just what's at the end of the year, right? And a lot of times our clients are relying on us to take the WIP schedule that they've dumped out of their software and with a lot of job to date information, and relying on us to try and reconcile it current year and prior year costs and revenues so that we can tie it back to the financial statement. So obviously that's a more expensive option because it's being done at our rates as opposed to internal rates. But on top of that, I mean, hopefully, the best of the best contractors are having monthly meetings with their project managers. And so, though it can take a controller or CFO hours to put together good, useful information before that meeting, to even come to that meeting prepared to walk through with their project manager, hey, where's this job stand? And same for the project manager standpoint. And a lot of times that's done in Excel or PDFs, and then updates are made after that meeting, as opposed to be able to come right into here and make those updates. And I'd had a recent contractor I was showing ProNovos, and one of the things they were most excited about is, a lot of times they sit down in those monthly meetings with their project managers, and you're just looking at tons and tons of data out of the accounting system that's not necessarily in a pretty format. And, even though project managers are dealing with a lot of numbers, and they don't want to be called accountants, in a lot of ways they're accountants, that they operate better a lot of times when they're able to see charts and graphs and things out of ProNovos, as opposed to just reports straight out of an accounting system that aren't necessarily made to be gone over, with the project manager on a monthly basis. So that's one piece. The thing that I did want to mention as well, just, while Denver has the WIP pulled up here, 2 things. So first of all, there's a lot of columns here, right? So I think as someone who's not as familiar with the WIP, you see all these columns, and whether it's internally or just looking at this, it can be overwhelming. So the first thing I would tell you is focus on the 4 things that we had to use to calculate everything that we calculated before. Okay, so that's the contract amount. Okay, so that's the very first column there. That's the estimated costs complete. So that's that projected final cost column, the 3rd column. That's your job cost to date. So 1, 2, 3, 4, 5, 6 columns in. Yeah, thank you, Denver. And then your build to date number, which is a couple columns over from there. Okay, those 4 columns are driving every single thing in this entire WIP schedule. Okay, so I know it seems like a lot of dorky math and accounting, but if you can add, subtract, multiply, and divide, I promise you can, take over and handle a WIP schedule and understand it. It's just, to me, it helps to highlight those columns within your WIP schedule when you first start looking at it, to be able to kind of separate what's a calculation versus what are my inputs. And the last thing I wanted to say on the WIP schedule here, just to make sure that you guys see it, is I've talked a lot about my contractors' WIP schedules when I get them, or just job to date information. ProNovos does a really nice job. They have columns. If you scroll to the right, Denver, it takes not only your job to date information, but it also pulls in prior year cost. It pulls in prior year revenues, so that you can get just current year revenues and just current year costs to tie back to your income statement. And that can save hours and hours and thousands of dollars. I don't think clients a lot of times even know understand how long it takes to try and tie back to that, because again, if it's an Excel, it's not pulling from your system. So maybe not all the jobs are there. maybe you're missing a few. The job schedules need to not only include just in-process jobs, but also jobs that were completed during the year. So a lot of times I'll get a job schedule from a client that's only jobs that are in process at the end of the year. Well, if there's any revenues earned or costs incurred on jobs that were completed in the year, you're not going to be able to tie back to your current year income statement. So Denver, show them real quick too how you can kind of set dates to pull in like completed jobs.
Yep. So if you guys are wanting to include, our active jobs, but also maybe we've had some jobs that are closed recently that we want to make sure still exist on the WIP schedule. So what you can do is you can include the closed jobs in there, and right out of the gate, it's going to show us active and closed, and it's going to give us a pretty long list. But what you can do as well in the filters is you can pull up a close date and say, I only want to show jobs, that have been closed in the current period. So let's just say up until the end of March. So all of our active jobs and then closed jobs, that are closed this year. So if we scroll through here, we'll be able to see maybe towards the bottom of the list, there's some closed jobs in here that, will need to show up on there as well.
Yep.
Yep.
Anything that says 100% complete in that percent complete column.
Right.
Yeah.
Yep. So it's a nifty tool that, not only, you guys can still manage those jobs in the accounting system to close them when they've been closed. And then you can pick and choose when these different kind of jobs are going to show up on the WIP schedule or not. Okay. We talked a little bit about the WIP and the projections. And if you want to take it one step further and kind of start looking at, company-wide information, we've got the WIP here. Great. We've got our percentage of completions, our revenue to date, over under billing totals. But, when we were looking at the projections and making those adjustments to it, what are some of those reasons? And this is, I think, the long-term goal of the projected final cost, if you guys are making all these adjustments in here, is to get this projected final cost root cause analysis. I know it's a mouthful, but it's got a lot of great information in here as far as, once again, company-wide, what are the biggest reasons we see? We've got 11 times we've had a negotiated buyout that's saving us, close to 100 grand in total, right? And if we scroll down to the reasons why we're losing money, we keep running into scope gaps, and it's costing us quite a bit of money. So as you're looking through this, you'll be able to, see job by job, what are all the reasons, a job is, in the plus or the minus, but the insight that you have here is just awesome. Right. And as we go through, if you wanted to pick a single job and just, I know this can be a little bit, kind of a lot to look at, but if you go over here, we can click, on our Chrysler building job right in the bar graph, and it'll just summarize it all, right? Here's all the reasons we're saving money, all the reasons we're losing money, and then a breakdown of what were the cost codes that were impacted, what were the total projected final cost adjustments. And as we go through here, you would just be able to see all of those different changes that have been made in here.
And that's why I think just from a best of the best contractor standpoint, it's good to have these meetings on a monthly basis rather than just at the end of the job, so that you actually have time to adjust and potentially get change orders or whatever, cost savings, whatever it is, to actually be a little more proactive on jobs.
Yeah, and once again, not meant to be a tattletale report. It's meant to give you guys the information that you guys are looking for out of all of your projects. If we're constantly running into something, I think we'd rather know ahead of time, these are the reasons we're typically going sideways, and do everything in our powers to avoid those kind of situations, right? And if you're looking for a little bit more detail, about a single project, this one's kind of at a company level that kind of shows all those root cause analysis. We do have our project dashboard that you'd be able to pick, we'll stick with the same job here, contract amount, earned revenue versus bill to date. So once again, feeding into that, what our over and under calculation is for the job, but being able to see all of those budget adjustments, pluses and minuses. And I think, we've gotten a lot of awesome feedback about this project financial timeline. It's one thing to see all the numbers on the screen. Hey, I see that my cost is here, and I see my bill to date is here. We must be in the positive. Well, the extra kicker here is this will actually show what you build, how much money you guys have received, and then what your costs are month by month. So as you would expect in the earlier stage of the job, you got to spend the money to get the job going. And then as we start billing, based on the percentage of completion, we're going to start receiving money. And then you'll see kind of where that break even point, roughly in October for this job, that, hey, we're actually bringing in the money, right? We're receiving money on the job rather than just spending it out of our own pocket. So I think it's just a cool, some of our project managers at some of our clients' offices have coined this the money graph. So, being able to see this information at a macro level, I think is just super convenient, and, always complex isn't always better. So a simple chart like this is just, I think, very impactful. Right. And if we keep going down a little bit further, you've got all your monthly activity for costs and labor hours. And then at the bottom, I'm keeping a tally of all of your change orders, RFIs, SMILs, all the, different types of documents you guys are wanting to track on the project as well. So I would say from a workflow standpoint, when you take it from the WIP, take it to the projected final cost tool, and you kind of see your end result here of all the reporting capabilities you guys have. I think it's just going to save everyone a bunch of time when you get into those job meetings. You want to make sure you have all the information readily available. If someone says, hey, why is this job going sideways? Well, you've got all the tools in your belt to say, hey, these are exactly the reasons why we're at where we're at. So
I think it's also really helpful as a CFO or a business owner who doesn't have time to get into the job weeds on a day-to-day basis, to be able to get into a system like this and see snapshots of things, dashboards, to be able to manage a business from a high level rather than having to get in and run 20 different reports of an accounting software and have those conversations. So I think this is a really good dashboard, especially for those monthly meetings.
Yeah, absolutely. And this is kind of a small sliver into the larger scope of, the analytics marketplace, but I know we wanted to focus today on kind of those workflows and, the WIP, understanding the calculations behind it and what all goes into it. But we do have some upcoming webinars here that I think you guys will also be very intrigued with, and we'll send, make sure you guys get a link to join any future webinars that we're going to be putting on. So Chris, any other items that you want to bring up here? I know I want to save some time for a little bit of Q&A for everyone, but anything else you want to add to this?
I don't think so. I'm good.
All right. Well, yeah. Hey guys, I know we're a couple minutes over than what we promised, but I think it's a pretty good topic of a lot of information. So if you guys have any sort of questions, feel free to throw them in the chat. We want to, make sure we cover all the bases here. And I
would say on top of that, feel free. I don't know if hopefully we have our contact info in the slides there, Denver. Yep. But if anyone ever wants to reach out to me at cmast@gbq.com, if you have questions outside of this, please feel free to reach out.
Yeah, by all means. And if you guys have any sort of interest in learning more about, ProNovos, you want to take it a step further, if you guys want to see any sort of demo or anything, please feel free to, email me or, and we'll get you guys a look into the product itself. And if you guys aren't clients yet, just know that if you guys do decide to have a demo, we can connect your guys' database in a pretty timely fashion. So you guys can get a full demo with your information in it. So if you guys wanted to see how powerful this thing can be, it's a pretty quick option to be able to see that, time to value. So. All right, so we've got a couple questions coming in here. The first one, how often does data sync into the ProNovos environment? Currently, the data is going to sync every night when no one's in the system. That way there's no interruptions with the accounting system or the ProNovos environment. So every single night there will be a sync that will be applied. And first thing in the morning, you got all the latest and greatest information pulled from the accounting system or any programs that you guys are currently integrating with ProNovos. All right. Another question about will this meeting be available? Yes, we will. This will be recorded and there will be a link sent out to everyone, I believe, that joined and be able to view this at another time as well. Okay. Let's see. Question about CPE credits. As much as I would love to say yes, I've done some webinars in the past that we offered CPE credits. Unfortunately, not yet. We won't be offering any CPE credits just yet, but it has been a topic of conversation to do more educational videos to get everyone some CPE credits, whether it's, a credit or two per video, but it has been something that's on our radar. Okay. All right. And then
Nope, yeah.
Chris, you had some.
No, nobody wants me to run back through the percentage of inflation calculation.
Yeah. But another question, we had new jobs throughout the day, we sync manually. That's a good question. Right now, there's not a button to do the manual sync. We are in the process of rolling out a multi-sync per day function. So I would say not yet, but it is on the radar in the coming months, or I shouldn't say months, in the coming weeks, to enable something like that and make sure that, if you are doing, a sync at lunchtime and overnight, you guys would have that option available to you as well. All right. And there's a question about pricing. I'll give you this. We can give you basically our pricing model is user-based model. It's so it's going to be a little bit different from things like a Procore, where it's based on the size or revenue amount per company. So if you guys do want any sort of pricing on this, we can get you in discussion with our sales guy. He can give you a breakdown of what the pricing model would be for ProNovos. It depends on the level of access that you guys have for the different users and how many users you guys want to sign up. So if you do want some more information, I can get your information. We can, send you guys some stuff as well.
I would say from my perspective, though, outside of ProNovos, it's a very reasonable price, especially when you compare it to, like Denver said, a Procore or something else that's going to be based on your revenues. If you're a construction company that's just growing, maybe your bottom line's not growing, but you're just doing more work. Sometimes it can be hard to swallow price increases that are just based on your revenue growth. So. Yeah,
I know with some of these other revenue-based ones, if you're doing 20% more revenue, you're gonna pay roughly 20% more on their software. So the nice thing about the pricing model we have is that price is just based on your users. So we hope you guys grow. We want to help you guys grow alongside, and that's why you're using a tool like this. So I think it's good for the people that don't want any surprises when they're looking at, how much does something like this cost. All right. All right, we'll give you guys another minute or two here, and if anyone else has any more questions, we'll be sure to make sure we get them answered. So
you want to address his question?
Yep, the question here, and I'll go back into the product itself. So the focus of this webinar has definitely been on the financial and reporting aspect of it, but we do offer what we refer to as our operations management module, which can be your project management tool, right? So definitely have some other information out there available to showcase this aspect of it, but this can do all of your document tracking. You guys can build digital forms in here, upload drawings, photos, RFIs, submittals. This does actually, we do have a partnership with Procore as well. So if you guys are working with a GC that uses a version of Procore that, you want to sync drawings and RFIs and submittals, things like that into ProNovos, they will be available within the ProNovos environment. So like, for example, you click into drawings, you would be able to see a Procore drawings option here. You click on it and it would automatically load in all the drawings that have been put into that project within the Procore environment. So this does offer project management software as well. And I think that's, the two-headed monster, if you will, that we can, not only save you guys time on the office side of things, but hopefully give you guys the tools to increase communication with the field, or be able to be that one-stop shop for storing all of your documents as well. All right. Does the software provide technical assistance along the process? Yes. So the typical way we go about it, if you guys do sign up with us, you guys will be given, training hours, and I will be the person that you guys would work with immediately following the purchase. So we typically see that the average turnaround for implementation is somewhere between 4 to 6 weeks, and that isn't so much making sure that everything is loaded in here. As soon as you guys have access to the environment, day one, you're going to have access to everything under the sun in ProNovos. So all the dashboards will already be populated with the information. If you guys do sign on with the operations side of things too, you'll be able to take care of that or utilize it right out of the box. So the implementation process is more making sure that if there's any sort of customizations you guys want to do, you guys would be able to work with me, and we can get you guys set up with some of the reports that mean more to you guys than maybe someone else. And we do offer a full implementation rollout. We do have a support team that along the way, if you guys have questions or comments or even just custom requests, we're always taking in advice from anyone that wants to help improve the product as well. So we'll give this, we'll maybe wrap it up right around 10 till. So we'll give a couple more minutes, make sure everyone has their questions. I think at 1:50 we'll close her down. And if you guys do have anything after the fact, please feel free to reach out to us. We're more than willing to work with you guys or answer any questions that you guys do have. So. Chris, I'm not seeing a whole lot of requests to go through the accounting stuff again, though.
Shocked. I'm getting a lot of personal emails as we speak.
Yeah.
That's why they asked if it was recorded, so they could go back.
Correct. Yes.
I'm surprised there's anyone even left on the webinar at this point. They probably still think they're getting CPE.
It might be. It might be hopeful. All right. Well, I think we're getting to the end. I don't see any more questions coming in. So we do want to thank you guys for attending today and being a part of this. And like I said, if you guys have any questions about ProNovos, feel free to reach out to me or anyone here. And likewise with Chris, if you guys have any sort of interest in any services that Chris or GBQ has to offer, I'm sure he would feel the same way, that you guys can feel free to reach out to him as well.
Yeah, happy to help, even if it's if it's something simple, even just doing a ProNovo, just a ProNovos pro bono, just to help out. So use me as a resource if you need anything.
Absolutely. Well, all right. I think that's I think we'll cut it there, and be on the lookout for our schedule, guys, for any upcoming webinars. I know the next one that we have scheduled is for April 26th. Looking at the AR collections efficiency and how we can, improve you guys' workflow on that end of it. So be on the lookout for that as well. All right. Well, everyone, take care. Have a good one, and we'll see you on the next one.